Hello guys, today we'll be starting with the next module, that is module 2, second module, sale or conversion of partnership firm to a limited company. Now, sale and conversion both are similar. Sale in the sense, if in case there is an existing limited company and they are willing to purchase a partnership firm, in that case it will become sale. And next, conversion of partnership firm. In case partnership firm, the partners running the firm, if they feel to convert the firm into a company, even that is also called as conversion of partnership firm. Now, why are we considering sale and partnership firm as one module itself? Because here we will be basically concentrating how are we going to close the books of accounts in the books of partnership firm. We are nowhere concerned with the purchasing company. We will be concerned with the firm which is selling their business to the limited company. Yes. Now, this module is something like continuation to dissolution of partnership firm, because when a firm is selling its company, when a firm is selling its business to a company, then what is going to happen? Firm and company, it is selling and company is purchasing. Yes. Now, firm is selling its business to company. When the firm is selling the business to company, what is going to happen to firm? It is going to dissolve and its business comes to an end. Its complete business is transferred to company. That is the reason here we will be majorly concentrating on how are we going to close the books of accounts in the firm at the time of sale or conversion of partnership firm to a limited company. Yes. So now, basically what we require in this is purchase consideration. When you go and buy something in a shop, say a pen or a pencil, do you get it for free? No, you have to pay something in return for a pen or pencil. So whatever you pay money, that is called as purchase consideration. So in the sale of partnership firm or conversion of partnership firm, the important term which everyone should remember is purchase consideration. Whatever the company is paying to the firm for acquiring its business is called as purchase consideration. So, how is this company acquiring the firm's business? Either it may take all the assets of the firm and repay all the liabilities of the firm, and difference amount, that is called as purchase consideration. Or it might not take any assets and any liabilities, but it might give a whole lot of amount to the firm as consideration for buying the business of the firm. That is also called as purchase consideration. So what is purchase consideration? The money which is paid by the company to the firm for acquiring the business of the firm is called as purchase consideration. This purchase consideration, you have two methods, net assets method and net payment method. Calculation of purchase consideration under two methods, net assets and net payment method. I have told you in the beginning, if a company is taking away all assets and paying all liabilities, it is called as net assets method. So, it is taking assets and paying off liabilities, and difference amount whatever the company is earning after making payment of liabilities, that amount it will be paying to the firm as purchase consideration. So, this is net assets method because it is taking away assets and repaying the liabilities, and difference amount whatever the after sale of assets whatever is remaining, that the company will be paying to the firm as purchase consideration. Now, what is this net payment method? Nowhere the company will be concerned with the assets and liabilities of the firm. It is the business of the firm to sell off the assets and pay off the liabilities. So, what is this? What is this net payment method? The company will be giving lump sum amount. So, it will be giving only lump sum amount to the firm as purchase consideration for buying the business of the firm. So, these are the two different methods of calculation of purchase consideration. One is net assets method and one is net payment method. Now, later part, net assets method and net payment method, they might be taking these three forms, consideration in the form of, so shares in the new company or debentures in the new company or in the cash form. So for example, if a firm, yes, firm, and this is company. Company is has planned to give purchase consideration of 50,000 rupees. Yes, 50,000 rupees. This 50,000 rupees, it might be divided as shares or debentures or cash, or 50,000 rupees worth shares might be given by the company to the firm, or 50,000 rupees worth debentures might be given by the company to the firm as purchase consideration, or net cash can be given by the company to the firm as purchase consideration. Either of these three, any of the way, the company can opt to pay purchase consideration to the firm, or it might even give shares in addition to shares, debentures in addition to debentures, even cash. How is this possible? For example, if company decided to give 25,000 worth rupees shares to the firm, next 5,000 worth rupees debentures, and cash 20,000 worth rupees cash. So in total, how much is it? So in total, what is purchase consideration? 50,000 rupees. Now 50,000 rupees is divided as 25,000 worth cash, 25,000 worth shares, 5,000 worth debentures, and remaining 20,000 worth cash. Or it might be 50,000 complete shares, 50,000 complete debentures, or 50,000 complete cash. So this is a brief introduction regarding sale or conversion of a partnership firm. So what is the main important thing you have to remember here? Purchase consideration, two different methods, and what might the form it can take. Purchase consideration, shares or debentures or cash. Now, accounting procedure in the books of firm, what are we majorly concentrating here in this module is how are you going to show the accounting procedure in the books of the firm while closing the books of accounts at the time of sale of the firm or conversion of the firm. Here what is going to happen to the firm? It is going to get dissolved. At the time of dissolution, whatever the procedure we were following in the previous model, same thing we will be following. In addition to that, the following additional journal entries are to be made in realization account and partners capital account. Yes, so what are those? For purchase consideration. Now, in realization account, you were showing sale of assets and payment of liabilities. Now, after sale of assets and adjusting it with payment of liabilities, you are getting purchase consideration, right? So, who is paying this purchase consideration? Purchasing company. So this is an adjusting entry. So what is this? It is an adjusting entry. What are you passing in realization account? Instead of writing all assets sold and payment of liabilities, you will be adjusting it with purchasing company, which is paying you the cash or debentures or shares, whatever the form might be. So purchasing company account data to realization account is the first entry. When we solve the problem, you will better understand. So first, just keep in mind, what is the first additional entry? Purchasing company account data to realization account. Second entry, for receiving purchase consideration. For receiving purchase consideration, I have told you the purchase consideration can take any of these forms, or it might be shared among these three forms. So cash in purchasing, shares in purchasing company account data. So what is the firm receiving? It might be receiving shares or debentures or cash. If we are speaking about firm receiving, it is in the sense partners receiving this. So shares in the company, shares in the purchasing company account data, or debentures in the purchasing company account data, or cash in or bank account data to purchasing company account. Who is giving all these things? Purchasing company account. Company is giving all these things to the partners of the firm. This is the second adjustment entry. Next, third one. Third and last one. For distribution of shares, debentures and cash among the partners. Yes, who is receiving these shares, debentures and cash? Partners of the firm are receiving the shares, debentures or cash. So partners capital account data. 2. What are they receiving? Shares in purchasing company or debentures in purchasing company or cash or bank account. So these are the three different entries which are to be made in addition with the procedure whatever we followed in dissolution of firm. So this is a brief introduction about dissolution of firm. From our next video, we'll be starting on problems on sale or conversion of partnership firm into a limited company.